All right, let's get right into it. Today, we're pulling back the curtain on two things that every single trader needs to understand. Those broker promotions that seem way too good to be true, and the real cost that's hiding behind every trade you make.
So you've been there, right? You're scrolling online and bam, you see this massive bonus from a broker. Get 100% back on your deposit. And your first thought is probably, okay, what's the catch? That's exactly the right question to ask. And today, we're gonna find the answer.
So first up, let's talk about those really flashy promotions. We're going to decode what a broker rebate actually is, and I'm going to show you the one little three-letter word that can tell you if you're dealing with a broker you can actually trust.
I bet you've seen an offer that looks almost exactly like this one. 100% rebate. I mean, that sounds amazing, doesn't it? But then you see that little word at the end, CAP. A cap of $300. What does that actually do to the offer?
Well, it's actually way simpler than you might think. A cap is just the absolute maximum amount of cash you can get back from that promo. So, using this example, even if your rebate maths out to $500, you're going to get $300. It's not some kind of hidden trick, it's just the broker being upfront about where the offer ends.
And you know, that leads to a really important question. If a broker is being totally honest, why put a limit on it at all? Why not just give an unlimited rebate? Well, and this might surprise you, that cap is actually a good sign. It's a sign you're working with a smart, sustainable broker.
I mean, think about it. First off, no business can just give away 100% of their revenue forever. A cap means the promotion can actually last. It also stops people from abusing the system, which means the bonus actually goes to serious traders like you. But most importantly, a clear cap means clear rules. No nasty surprises, no fine print. A clean system has a clear cap. Simple as that.
Okay, so we've cracked the code on promotions. Now let's shift gears and talk about the cost that is literally built into every single trade you will ever make. Let's talk about the spread.
So, in the simplest terms, the spread is that tiny little price difference between the buy button and the sell button. It's how most brokers make their money. It's basically their fee for giving you access to the entire global market, right there on your screen.
And here's what that looks like in the real world. You always see two prices, right? The ask price, that's what you buy at, is always a tiny bit higher. The bid price, what you sell at, is always a tiny bit lower. And that little gap right in the middle, yep, that's the spread.
And this right here, this is the big aha moment for so many traders. You ever wonder why every single trade you open immediately starts in the red just a little bit? That's the spread. It's the cost of admission to the trade. The price has to move in your favor enough to cross that little gap before you even start to make a profit.
So, just knowing what a spread is, that's only half the story. You also got to know that spreads can act very, very differently, depending on your broker and, of course, what's going on in the market.
Okay, so most brokers offer what's called a floating spread. It can be super low 1 minute, but then blow out to be huge during a big news event. Now, truly fixed spreads, they're almost impossible to find. So the sweet spot, the thing you really want to look for, is a stable spread. This means it's consistent, it's predictable, and that is absolutely crucial for planning your strategy and, let's be honest, for your own peace of mind.
So, let's bring all this home. What's the big takeaway here? Understanding things like caps and spreads, it's not just about the nerdy details. It's really about learning how to spot a broker who is transparent and reliable.
A really transparent broker is going to give you options because they know one size doesn't fit all. You know, you might go for a pro account with low spreads and zero commission, or maybe a zero account if you're a scalper. The whole point is you get to pick the cost structure that actually fits the way you trade.
And this number, this is why it all matters. For a transparent broker like Exness, something like 90% of their profit comes directly from spreads and commissions. Now, what does that tell you? It means their success is tied to you being an active, successful trader, not to you losing your money. Their business model is actually aligned with yours. So the real takeaway is this. Your goal shouldn't be to just find the broker with the absolute rock-bottom fees or the most insane-sounding bonus. Your real goal is to find a partner who's transparent about their costs, stable when the market gets crazy, and honest about their promotions.
Because at the end of the day, a clear, predictable trading environment is worth so much more than saving a few pennies on a spread. The best partner isn't the cheapest one, it's the clearest one. So, take what you've learned here today and ask yourself a serious question. Who are you really trading with?